Hey guys, welcome back to the channel. Today we'll be taking a look at the overall market via QQQ. We'll see what Solana's doing on a technical level. We'll take a look at our Apple's options trade and talk about losses. And then we'll take a dive into what we call the Doomsday Dozen dashboard by Longbow. The Qs. Today is Wednesday, March 6th, and the market overall today is up 1%, which is really good. Yesterday, I believe we were down almost 2% on that down day, and I think we needed it. There's been a couple of days worth of gains, and the market's been appreciating a lot. Let's dive into the weekly chart, and we have a sell count down to 5. It means that we potentially have a couple more days of upflows, and the market is looking like it's trending that way. Right now, we don't really have any clear stops besides this, looks like 440 level or a little bit below that, maybe 436 to 437 level. From our RSI, we're heading into the overbought territory, but we haven't hit it yet. Run here. We did have, some of these 13s and some of these 9s and some of these other 13s. As you can see, it did sell off a little bit, but we can definitely tell that we're in a bull market right now for the overall market. These 9 and these 13s have sell-offs. These are just, I think, what is typical of a bull market here. And then I'll keep you guys updated if we hit that 9 in the daily count for the overall market. Looking over at the daily, we got some upper targets around some lower targets of maybe 425. From the weekly level, we had these 9s that hit and then consolidated. Right now, we have a buy countdown of 3, so continuing up here in the hourly time frame. Looking at the weekly, this is a little cautious for me. We had this 13, I believe, earlier this week or last week. From a weekly time span, what we see is that the weekly chart gives us the most data and is some of the most powerful and most accurate data. And especially when we have 13s here, it's going to make me a little wary of the market. I think we can still run, but maybe a little bit in a small pullback. The end of this week into next week, I wouldn't be surprised. And so if I was trading just the market right now and on my system, I would be a little bit more cautious. I would maybe be not putting as many trades in equities as I normally would, just because this 13 is making me keep an eye on it. The last 13 from combo here, we saw it sell off by a little bit. I'm saying we do sell off, but there is a potential. Personally, I still think the market is going to keep going, but this is the last time this combo 13 hit. We also had this sequential 13 that hit here, but as you can see, market dipped a tiny little bit, maybe a couple percentage points, and then continued on since back in December timeframe. So I think overall, market's doing pretty good. Still a little cautious because of this 13 on the weekly. But that doesn't mean that, I see any weakness currently. Okay, moving over to Solana or Sol. Right now on the daily chart, we have a countdown in a downtrend. We have some upper targets here of about 445 and then 145 and 160. Right now, looking at the daily, RSI is, getting a little bit overextended and then coming back down. Let's see if it holds this kind of pattern here where it doesn't fully return to the oversold, but it just stays gets a little bit below the overbought, which is good. I think Solana had a big day move yesterday as well too, very similar to Bitcoin yesterday. If we look over here at the daily time frame, we saw it wick. We had a high yesterday of about like 144 almost, and then a wick down heavily from there all the way down to 110. That's even more volatile and more extreme than Bitcoin, but Solana is a higher beta, which means that there's just more volatility, a higher risk and higher reward for Solana. And so not terrible, and it's recovered from there pretty well. Right now from a daily chart, we have a sell countdown, which means the general direction is going to be up. We have some lower targets here. I'd be a little bit more concerned if we start breaking another couple of these at 120. This wick, and this was a really good buying opportunity for whoever saw this wick and had the dry powder. I wish I had the dry powder to add some more into this and already put in some at around the 125 120 range, but it's okay. I think it's a long-term hold for us, and that just shows me that sometimes it's good to have some cash on the side and just to buy some of these major dips. Looking over at the weekly, nothing to note really here. We're still on a very strong uptrend here. Our So hopefully the momentum is going to pick back up, and she get some really good price appreciation in Solana. A lot of people have been following is saying Solana's due for a catch up. According to Bitcoin, Bitcoin's been on a massive tear, and so Solana just needs to catch up and thinking and heading over maybe into this 200 region within the next month or so. So let's see how this plays out, and let's a little bit update for Solana. Okay, something I did want to review you guys is our options trade with Apple. I think if you've been following along, I did take a trade with Apple, and it didn't do so great. And what you'll learn in trading is that most of the time, at least 50% of the time, you're actually wrong, and it's actually really good to cut your losses and limit your losses. What I've learned is during trading is that you don't want to risk, what you do want to risk is maybe 1 to 2% of your whole entire portfolio on a single trade. I've seen some other traders go a lot further than that, up to the 5%, even 7% if they're really confident in this trade and they have the conviction to make that trade. But generally 1 to 2% on your trades is generally acceptable. And what you want to do is, some people take just a account portfolio. So 1% of that account portfolio, let's say you have, a $10,000 portfolio, that should be a $100 loss that you should be taking per trade. I see some other people, and generally the fights that I follow is I take all of my investment accounts and I try to only bet, 1 to 2% on each trade. So overall, you should be having a bigger bracket than that, and so overall maybe you have an account size of $100,000, and so that 1 to 2% allows you to lose 1,000 or 2,000 in a trade. So we did enter here for Apple, I think 2 weeks ago. So we actually got out of that trade. We entered the trade on these weekly 13s and showing that we could have reversed. This kind of is a prime example of when DeMark doesn't work, and that's for some reason the market doesn't think Apple should be where it was. We had a stop at 178, and this took us out. For that specific option trade, I bought 2 contracts and we lost about $300 on that trade, and that's okay. Most of the time when I'm actually trading options, I actually am okay with losing the whole entire premium as well too. I think with this case, I caught it well enough, and that I think we kept some of that premium, and that's okay. I think that was just part of my system and why I had to take profits. If I were to take a look at this chart right here, you're bottoming out here at this bottom of the end on the daily time frame at around 168. Here you have really good support at 170, and then on a weekly you have really strong support at 170 as well too. I think if I didn't have my system, I would continue to hold those options, and I think we're due for a reversal sometime with Apple. But again, this is why you trade and you follow rules. Once you hit your stop loss, you should be going out and then reassessing the trade. And I think that's a good segue. I wanted to talk to you guys about the percentages and why you have some of the percentage. So taking a look at this graphic right here, it kind of shows you if you lose about 1% of your portfolio, you only need 1% to recover your losses. You see everything's still pretty much the same until you get about to 10%. If you lose 10% of your portfolio, you're actually going to need to make 11% of profits back. And as you go further down this graphic, what you'll see is once you hit like 50% of your portfolio, you need to make 100% of profits to break even. And it gets even more extreme of if you lose 90% of your account, you need 900% or 9x to get you to, back to break even. So this is why trading, it's really important of cutting your losses, and that's why people use the 1 to 2% portfolio or suggestion for trades, and this is why basically you really want to limit your losses, knowing the fact that you're going to be wrong most of the time. So really important, for you guys to understand during trading is to keep your losses to a minimum and then have an exit plan always. And then the last thing I want to share with you guys is from the Longbow dashboard. I've actually just found it today and I thought it was pretty interesting, so I figured I'd share it with you guys. They do have a dashboard called the Doomsday Dozen. I was trying to look at specifics for it and trying to dive into what all of these scores are. I'm going to do some more research and I'll keep you guys updated, but my initial pass at this is, as you can see, there's a speedometer here with extreme fear and then extreme greed. I think what the Doomsday score is just telling us what kind of market we're in. And right now we have a score of 95 and we are, all the way over in this extreme greed area. I think the last time we hit this extreme greed area was back in July, and that was a market top. And then we hit here at a low score, I think, of 40, and this is the bottom of the November time frame. So I think the overall score right here, it gives you the overall score, gives you the fear and greed signal Market momentum, I'm assuming, is, how strong the market is moving. Market strength, I'm not sure how they assess this, but there's a score on this. Market breadth just means that, are the small companies doing as good as the big companies? And that's definitely been improving. Looks like they have the equity put to call ratio. I'm not sure what this one does. We have volatility, which is the VIX index right here. It's been pretty flat at this 15% or 15. And then junk bond demand. So junk bonds are just basically high risk, high reward bonds. And it seems like it's been bottoming out, and you should probably see it increase as risk increases, more demand for junk bond and people reaching out further in a risk curve. Safe haven demand, I'm not sure what this one is. VVIX is just the volatility of the VIX, and then the VIX. I've seen a lot of people use this ratio. If it's high, it means they're a pretty volatile environment, and then we're low here. I think we're in an okay. It looks like they also have monthly PMI built into here. So PMI just basically shows you how well the industrial sectors are doing, and right now we're at a 52, which should be increasing as we're getting better. And then yield inversion is when what they call the yield curve is inverted. It means that there's a discrepancy between the long end and the short end of the curve. When yield inversion is happening, typically that's what people use as a warning sign for a recession. As you can see, the yield curve has been uninverting over the last couple of months. And then, I'm not sure how they calculate the score, but looking at the overall score, I wouldn't be too worried. Yes, we are in, a high extreme greed environment right now, very overstretched. We also had those 13s, as you guys saw from the NASDAQ chart on the weekly time frame. So, definitely overstretched. I wouldn't say that, we're going to correct and we're going to crash. What I do think is that maybe for now, I'm going to limit some of my trades due to this, being so greedy. I think that what we saw yesterday for Bitcoin and the leverage being wiped out of Bitcoin was maybe a good indicator and a good maybe model for what the equities market should be doing. Maybe we do need a further flush down to wash away some of that leverage and just reset things. So overall, we do have some conflicting informations. I'm still strong, but getting less bullish, at least in the short term of the 1 month time frame. Still very bullish in the long term of 3, 4, 6 months out. Just in the short term, things were kind of overstretched and going to limit some of my trading, at least on equities. So I hope you guys enjoyed some of the content for today, and I'll check you guys next time, and keep following me if you guys want to keep updates on the market, and then I'll kind of keep us afloat and keep us out of danger for this market. So I'll see you guys next time.